taxes this week. Last week we were talking about money energy and how to shift those money energy. This week we're going to be talking about the one big, beautiful tax bill. So I'm not going to keep you long because it's late. I've decided I'm going to jump on no matter what time it is and just, share the information with you because that's what we're doing now. We are definitely shifting, we're making changes, and we're doing things just a little bit different, okay? All right, so in this one big, beautiful tax bill, what are some of the changes? So, some of the changes for individuals is the tax brackets. I know I have spoken to you guys before in regards to the tax bracket. What is a tax bracket? Well, you could think of a tax bracket like a bucket. You have a certain amount of income, and then they have a different buckets for each brackets, okay? So they have the 10% bracket, the 15% bracket, which with the new tax bill is going to be changed. Okay, so now it's going to be from 15% to 12%. A lot of people is going to be happy about that because you're going to be going home with more money on your check. Okay, the next bracket is the 25% tax bracket, which is now going to be 22%, and so on and so forth. We're gonna just go through all the brackets today because that's what we're here doing. Okay, it's gonna change to 24% now, so that's good. So the only area it's not gonna change is if you're in the 35% tax bracket. Everything is gonna stay the same, but everything else we're jumping down at least 2% changes in the tax bracket. Okay, so that's going to be good, and those changes are going to be good from 2025 straight through to 2028. We're going to see if those changes are going to be affected going forward after that. They might change it again before that, they might not. Hey, Tuxtron, how you doing today? Hi. So those are some of the provisions that's going to be taking place as far as the different tax brackets go. Okay. What other changes are going to be affecting individuals? So the standard deduction. Hey, Gabrielle, how you doing? The standard deductions is going to change also. So the filing single, that standard deduction is now changed. It used to be 8,300. Now it's going to be increased to 16,300. That's the new provision. I think that's awesome. You know why? Because individuals, the inflation has gone up so high, cost of living has gone up so high, you don't have a chance to take itemized deduction because you're working in a W-2 job. How you're unable to take a standard deduction. So this is good news for our individuals who cannot take itemized deduction. Your standard deduction will lower your tax liability. So that's awesome news. Okay, the same thing is happening for head of household. It's going from the 12,000 to about $24,000, so that's pretty awesome. Married filing jointly, 32,000. It's going up to about 32,000. And another good thing is another one of the provision is the child tax credit. The child tax credit is now going to be $2,000 per child. Okay, so that's pretty good because if you have children, then you get credit for those child. So there's a little bit of something for just about everyone. Even with the additional child tax credit, it's possibly going to go up to like $2,500 for each child, which is going to be really, really good. Okay, so awesome changes for individuals. Tomorrow, Tomorrow, we'll jump into the changes for business people. We'll talk about the QBI a little bit more tomorrow. So, I think you're going to like that because people who are individuals who have small business, there is some changes that's going to happen for that. And it's going to be good because, hello, we are usually not considered in these changes, so the fact that they include us in this change is a good deal. Okay. When you have such big changes like this, you cannot expect to please everyone, so the stuff that we do get, we definitely work with it, and sometimes we find the workaround or the loophole, they say. The loophole. No, you're gonna make sure you record your stuff well. You're gonna record your expenses well so that you will not have a large tax liability. That's gonna be your thing for this year. That's your mission for this year, is making sure that you are keeping good records, because that is one of the number one mistake of our entrepreneurs these days, is not keeping a good records of their expenses to help them to reduce their tax liability. But that's not going to be you this year, right? That is not going to be you this year, because you are shifting your energy, right? So you can get clarity in your taxes, and you're going to be keeping structure because you are going to be, keeping yourself updated like we're doing here. So tune in again tomorrow for Tax Talk with Nadia. And that's it for tonight. Tomorrow we're going to be talking about the QBI, and we'll get into it, okay? I'll see you tomorrow. Hey, James. What's good? Fine night. What? Pushover only comes up with you? I don't understand what that has to do with taxes, but okay, James. Who knows what you're trying to say tonight? But if you have a tax question, you can definitely punch it in down there. Hey, Terry, thanks for the compliment. You guys have any question about taxes tonight, or even energy shifting? Because that's what we're doing on this channel. We're doing energy, money energy, because we're going to be making money moves, and we're doing structure with taxes, compliances, and budgets. Okay. All right. If you guys have anything else, have a good night. I'll talk to you next time. Okay.